Hey guys, super happy to be here once again on our show, the TradePod. And today I'm privileged and I'm super happy to have you, Ryan, on our show, Ryan Gold. As he said, it's a privilege to have you here. And I'm super happy that we had the chance to have this conversation. So in the pre conversation, we have like, some calls before and eventually we done it properly uh and we arranged a podcast and I'm super happy. So first of all, thank you for being here and yeah, let's introduce you.
Sure. Thank you for having me, FX. So my name is Ryan Gold. I'm 31 years old. I just had a daughter, 8 months, cutest little thing in the world. And yeah, I'm excited to talk about everything relating to trading, to my background, to my side hustles, learn a little bit about you and your community. And floor is yours. I'm ready to answer all your questions.
Brilliant, brilliant. So first of all, I'm happy. Now, before we dive deep into everything, um, I want you to go a little bit in depth about yourself and about your journey and what led you to be the place that you are in today.
Sure. So I'll start with from my background in school. So I'm a finance major. I'm born and raised in Montreal, Canada. Graduated school here in Montreal in a business school called the John Molson School of Business, which is a business school from Concordia. And right out of business school, I went into finance and I was very interested in finance as well as real estate. And I didn't necessarily know what my journey was about to be, but I decided to pursue commercial real estate. So as a matter of fact, right after I finished school and right before I started working, I actually went on a trip to Israel, and I was there for a month in your part of the world. And obviously, things were a lot more calmer back then, but it was great to be there, and obviously can't wait to go back sometime very soon. But spent about a month there, and when I got back here to Canada, to Montreal, I decided to go full go and to pursue my commercial real estate brokerage license. So I started working for a company called Cushman and Wakefield, and they're a global company. And I worked for pretty much the best team in Montreal, or actually one of the best teams in Canada. I was there for about a year, learning from them while I was pursuing my license. I got my license, and now I was a commercial real estate broker. And I worked for the company for about a year and a half. They were focused more on office and leasing and whatnot. I was more focused on the investment side. So I actually went to another company called Avison and Young, and I was there for pretty much close to 2 years. I was working on their capital markets team, focusing on multi-residential properties in the greater Montreal area, which is a pretty big area. Obviously, Montreal is an island, but the surrounding areas as well comprises it's one of the largest, I guess, greater populations in North America. So focused on
Right.
that for a little bit. And then, just typically, I guess brokers in the space kind of jump from firm to firm, commission splits, commute time, et cetera. Obviously, there's a lot of different reasons, but to make a long story short, I actually joined a third commercial real estate brokerage firm, one closer to my house, more of a local shop as opposed to one of the big corporate offices. And that sort of was, something very interesting. And I started working there, and obviously now we're reaching about 2020, and something in March happened called COVID. I'm sure you've heard of it. And
Actually, it's my first time. It's my first time talking about COVID. No, I'm
yeah,
just kidding.
so no, I know that. So it's funny actually. So now we're in March of 2020. Obviously, I'm a commercial real estate broker, and obviously, as you know, the world came to an absolute halt. But something interesting happened in that time, and hence this is the trade pod. So we got to talk a little bit about trading. Is that I noticed something, and I'm sure a lot of your listeners and maybe yourself as well noticed something that in the March of 2020, the market obviously crashed and crashed very hard. So me being an opportunistic and putting on my investor hat on, I saw that there was an opportunity to make some money in the markets because it crashed too far, too fast. It was almost like the world was coming to an end. And quite frankly, again, we didn't really know what was COVID at the time, and there was a lot of uncertainty. And obviously, as you know, the market hates uncertainty. And I saw there was an opportunity in the markets. So I actually put my whole career on hold when it came to commercial real estate. And I did pretty well in the short period of time that I was there. I guess it was a total of, I don't know, maybe about 3 or 4 years in total that I was involved in real estate. But as a matter of fact, so when I saw those opportunities in March, not only did I put my investor hat on, but I actually got into trading and day trading equities. So now we could talk a little bit about trading. So I was kind of day trading, swing trading, long-term investing, sort of doing all sorts of different things. And that lasted for about 2 years or so. And in those 2 years, I was kind of doing a lot of other different things. I was involved in a couple startups. I pretty much had my entrepreneur hat on during those couple of years of COVID because in commercial real estate, when I was a broker, right, I was relying on buyers and sellers to sell their multi-residential properties, their apartment buildings. And I noticed right away that everyone was sort of at a standstill. Nobody wanted to transact. And then I was kind of realizing that, hey, I was working on commissions only. And right now, my future is being dictated by other people. And I can't make money if people aren't going to transact and buy and sell real estate and whatnot. So that's where I kind of put the ball in my own court and saw an opportunity in the market. So began day trading. And that was quite fun for a long period of time. I would say probably until 2022, when obviously inflation went rampantly high. And I saw that the Federal Reserve in the US started to raise interest rates. And one thing that I'm going to teach you, and I'll teach your listeners as well, is that, and I learned the hard way, obviously, is they say don't fight the Fed. And what that means is that if the Fed is giving you one thing by raising interest rates, and my sort of niche in trading was investing in growth stocks, and I'm sure another thing which was very big at the time were SPACs, special purpose acquisition companies, where you would have a company at a $10 NAV. They would announce that they were merging with whatever the company it was. And instantly on that news, the stock would go from $10 to 20 to 30. And it was just almost like the Wild West. So there was a lot of money to be made in those couple of years. But unfortunately, I learned the hard way that when the Federal Reserve started to raise interest rates and these growth stocks started to get hammered, the saying buy the dip, but the dip keeps dipping, it could get very dangerous very quickly. So unfortunately, my day trading career came a little bit to a halt. I was actually proposing to my now wife of 3.5 years at the time and realized that, a career where you can make a lot of money is great, but there's a chance of losing a lot of money. And so I kind of, branched out a little bit and went towards another company, which was in the private real estate space. So I know I'm talking a lot. Did you want to ask anything in the meantime before I kind of get to the present day?
I'm listening and I really enjoy listening to your story, to your professional story. For me, pivoting uh from like being a brokerage for residential properties, working on commission based to trading, understanding that you cannot dedicate your own future to by the goodwill of other people, which I think it's the worst strategy on planet Earth. Pivoting onto becoming a day trader, I think it's a really intense pivot because from working in sales and like having like a more of an entrepreneurial hat onto a trader, which you need to be much more calm, much more decisive. And I know it because on my journey, because I wore that hat for almost 3 years, not in a row, but 3 years, and but transitioning into trading, but like 100% trading full time, it's hard, and I would love to understand or to hear out of your story, how did you manage this entire period and how you could transition from being a broker of properties onto a trader, and like making sure that you're consistent with your results and you are up to it and able to make money, basically.
No, no, for sure. And that's a great question. So going back before I kind of transitioned to being a trader, obviously I was working in the corporate world for many years, going downtown, the classic 9 to 5, the commute, the extremely expensive amount for even for just parking my car downtown. And it was very much this corporate lifestyle that, I'm happy that I kind of started out that way and I learned a little, and, it kind of shaped me who I am today because I got a sense of that 9 to 5 corporate lifestyle. And I realized very quickly that this probably wasn't for me for very long. So it was almost like a blessing in disguise with COVID because COVID was really I guess, the event that made me pivot towards day trading. And the reason why it went from, and to answer your question, from a broker to a day trader is that going back to where I started my journey before when I graduated school is I was a finance guy. And there's two components in finance when I learned in school. There's the corporate side of finance and the investment side of finance. And the corporate side, I sucked. So everything relating to, being a CFA or sorry, a CFO or getting my CFA and kind of working in that corporate finance world, the investment banking world, that necessarily wasn't for me. But I found a little niche that I was very good at and very passionate about was on the investment side. Day trading, investing, stocks. I read a lot of books, The Intelligent Investor. I'm sure a lot of your listeners obviously know that. Benjamin Graham, which is Warren Buffett's, Bible. And I read a lot of investment books, and Peter Lynch is another one that his book that I read. So I read a lot of books. I watched a lot of YouTube. I actually learned a lot more of investing and trading and all that just from my own knowledge from the internet than actually school. And so now going back to the question is again the reason why I went towards day trading was really simply that I just saw an opportunity and the opportunity was COVID. And COVID really crashed the market hard. I've never really seen a crash like that. I know a lot of people obviously were around during the dot-com bubble of the early 2000s, the 2008 financial crisis. Problem was, is right, I'm 31 years old. In 2008, I was in grade eight, 13, 14 years old. And the dot-com, I was 5 and 6 years old. So obviously wasn't involved during those times, but this was probably the closest event to that, even though you could call it a flash crash because as it went down very hard, but it rebounded very hard. And that was the
Mhm.
opportunity I saw. And, those couple of years were very fun, made all kinds of money. But like I said, the party came to a little bit of a halt when the Federal Reserve started to raise interest rates and, started trying to buy the dip, trying to time these dips, but, or as they say, don't catch a falling
Yeah,
knife or these dead cat bounces. These are all trading terminology that I'm using. But, to answer your question, I still think it was a great pivot because obviously what we're going to talk about later in the podcast kind of shapes it all up from here. But yeah, I
obviously.
hope that sort of answers your question.
Obviously, first of all, I would like to say that for me, it's a pleasure having conversations. This is one of the reasons that I'm having this podcast. And right now, that you spoke about your journey, I can really understand your overview about your journey because like your senses and you have developed a much more deeper senses over how to overview opportunities and how to and like identify the opportunity by its core. And I think it's a really sustainable approach to be managed when you're on your own. And I really appreciate it because it's basically entrepreneurship, and I really relate to what you're saying here. And now, without further ado, let's dive deep into what you're doing nowadays. I think it would be very exciting to hear. And let's talk.
Sure. You know what? Before I actually get into what I'm doing today, I kind of want to finish the story of my journey because it's still
Yeah, of
not
course. Go
completely
ahead. Go
finished.
ahead.
No, no, because it all ties in together, and you'll see how it all works out. And
Really?
thank you, Effect, for the compliment. And entrepreneurship definitely is hard. It's not for the faint of heart. Especially when, even from everything from being a broker to a day trader to obviously what I'm doing now, with so on and so forth, it all ties into entrepreneurship. And obviously, it's not meant for
It
everyone. You
is
have to have thick
entrepreneurship. It
skin,
is
and
entrepreneurship.
there's a lot of ups, there's a lot of downs, there's no straight line, right? I know many people obviously are happy making a paycheck and going to work from 9 to 5, having their weekends and running it back every week, every month, every year. That's sort of not my way of doing things, and I believe
Of
it's
course.
not yours as well. And I probably believe that most of your listeners are probably in the same bucket as us. So to make a long story
Absolutely.
short, and my journey is definitely different from, I'm sure, the other people you've had on. But um, when I mentioned about day trading and kind of took a little bit of a pause, where I trading and sort of, I wouldn't say trading, let's call it investing, because right when the market came to a crash and everything, the Amazons went from a few hundred to $80, and Tesla was at $100, and all these good companies were really beaten down to a pulse, call it, I think it was September to November of 2022. I decided that rather than day trading and time, a valuable lesson that I learned is that it's not timing the market, it's time in the market. And
What do
so
you
rather
mean?
than time, so good question. Instead of when you're timing the market, aka day trading, you're just kind of timing when to buy, when to sell. You're looking at charts, you're reading news, and you're kind of just back and forth. You're in, you're out, you're in, you're out. Rather than time in the market, where this is where what I did is that when I saw these beaten down companies, the Amazon, Googles, and videos of the world, I started putting capital to work and started just buying and simply holding. And, if there were little dips, I would sort of dollar cost average and slowly build a position. But to this day, 2022, almost 3 years later, most of these stocks that I bought, a lot of them close to the lows, I'm actually still holding. So rather than timing the market of when to know to buy, when to know to sell, you just buy, you hold. You obviously could take profits when you want, or, like I said, or you could dollar cost average. Right now is actually a very interesting time, today on Tuesday, February 25th, because over the last 3 or 4 days, the market has taken a huge downturn. And whether it has to do with Trump's tariffs, Elon Musk's Doge, lots of uncertainty in the world right now. Obviously, markets and technologies companies and whatnot are being affected right now. So to your listeners out there, right now might be an interesting time for, if you were on the sidelines, to start, simply easing into these good companies at a discount. And the good companies, I mean, the Mag Sevens, or typically the stocks that I like to look at or invest in, are things that I currently use, currently like, currently wear. Good example, right? You have an iPhone, I have an iPhone, you should buy Apple. I have a Tesla, you drive a Tesla, maybe you should look into buying Tesla. Oh, you use Uber a lot, you take Uber, you order Uber Eats, maybe look into Uber. These are actually three companies that I'm in, but I'm just using, these are examples, right, that I'm using on a day-to-day basis. But anyways, I could talk
By the
all,
way, guys,
yeah,
it's a short disclaimer. We're not suggesting you to buy or make any kind of action. It's just a story of Ryan and what he does and how he looks at the market. So, small disclaimer, this is not a suggestion to buy or sell. It's just a podcast. It's a show. Thank you.
of course. Thank you, Effect, for that. Yeah, these are just my suggestions. This is just what I'm buying. Obviously, everyone does what's best for them, but thank you for obviously pointing that out. So, you know what? Obviously, I'm very passionate about stocks and the markets. I could talk about this all day, but for the sake of the podcast, obviously, I want to get through the journey and obviously talk about what we're mainly here to discuss. So to make a long story short, trading and whatnot was sort of like a side hustle again, where I'm not looking at the markets every day. And I was introduced. I was actually in Miami on a family vacation, where I was introduced to a guy here in Montreal who was in wealth management, and he was becoming a partner at this private real estate firm. So again, going back to the finance and the real estate, two passions of mine, I was interested to learn a little bit more. And to make a long story short, there was this company that I worked for about a year and a half, called Group RMC, and they had about 2 billion AUM, assets under management, and owned about 200 properties across the United States. And I helped them. I was working on their business development team. I was involved in a few aspects in the company and whatnot, helping them grow, raise capital, and that was something that very much shaped me, who I am today. I learned a lot in those year and a half, 2 years. Obviously, as you can hear, I've done a lot of, back and forth and back and forth, a lot of jumping ship of trying to find my niche. That's obviously, one of the things of being an entrepreneur. Sometimes it's difficult finding that niche, but right now, this sort of shapes up to where I am right now. So right now, there's twofold. Number one, I'm actually a fund manager of a fund that I'm currently working on right now, and I could dive deeper into that a little bit later. And the other thing is I represent a few companies in the trading world, specifically U.S. equities, and sort of going back to my trading skills and trading. I was always still passionate about being involved in trading in U.S. equities, in the markets. Maybe it wasn't for me specifically to trade on a day-to-day basis, but I still wanted to be involved. So this is where I'm at now. Obviously, I'm sure that you're going to have some specific questions of, who I'm working with, what we're working on, who we are. So I'll let, given you're the host of the podcast, I'll let you
First,
ask the questions.
first of all, I would say that um, right now you're wearing the hat of an entrepreneur for full time. And you know what? Let's dive from difficult questions, and I would like to ask you about the difficulties in in founding and funding a fund. um, and what it actually means, because when you say that right now you're founding a fund to manage AUMs, I think it's really not it's a real dynamic approach to look at things, which I would like to dive deep into what do you actually do and how do you actually establish a new business, and how do you actually make sure, like, I know this business, or I think I know this business, but I know it's a real competitive business, and like the era of funds managers are rapidly evolving, and you need to have a sense of a competitive advantage over your competitors, of course, in order to gain the belief of the customers, which it's not easy. And I would like to hear, how do you construct a new business, like the business that you're building right now, and how do you proceed with your own journey in order to grow your business, and what are the difficulties that hold you tight, uh, that, like, you cannot progress without them.
For sure, all great questions. So let me start actually by addressing what
Yeah, I like
this
to wrap it
fund.
up. I would like to wrap it up in a box and like to give it to you. Do your own.
Yeah, yeah, no problem. So to kind of sum up exactly what I'm doing right now, which is very interesting, it's an so the fund that I'm managing is in a specific asset class. The asset class is called life settlements. I'm sure, have you heard of what life settlements are?
Yeah, here in
I
Israel,
fi
it's
I fi
incredibly
I fi
different. Like
I
terms
understand, and I
terms that,
figured
that, that are being used in North America, or could be completely different here in Israel.
no problem. So let me rephrase the question. Have you heard of life insurance?
Now it's much more clear. Thank you.
Now it's clear. No problem. So this fund that we're currently building right now is in the life settlement space. Now you might be thinking, what are life settlements? How did I get to life settlements from trading, from real estate, etc.? So very simply, the company that I worked at previously in the private real estate, they were doing a few things, right? They were mostly focused on real estate. The problem was, and again, going back to 2022, 2023, there was a lot of uncertainty in the world. And what I mean by that is obviously at that period of time, I believe Russia invaded Ukraine. So there was a lot of geopolitical uncertainty. Obviously, the future US elections were coming up. Just long story short, a lot of uncertainty in the world. Stock markets were very inflated, real estates were very pricey. We were trying to find an asset class that sort of was a niche, number one. And number two is something that nothing's guaranteed in life. Well, actually, two things are guaranteed in life: death and taxes, death being number one. So we stumbled upon through a close family friend of ours this business, this asset class called life settlements. And what life settlements are, very simply, to explain it as simple as possible, is you, effect, have life insurance. You're now 80 years old, you're retired, obviously your income is drastically down, you're spending a lot of money, hopefully you're healthy, but for some people who might have an illness, cancer, so on and so forth, obviously there's a lot of issues that happen when you're older. Or quite frankly, you have a life insurance policy, you have children, your children are well off. And long story short is you need the money for whatever reason. Okay. You need the money for whatever reason, and you're looking to sell the life insurance, your life insurance. Many people don't know this, that you could sell your life insurance. Life insurance is an asset. Just like your house, a stock portfolio, a real estate portfolio, it's an asset. The unfortunate thing is in this industry is that most people let their life insurance lapse. So it becomes worthless. They could be paying it for 30, 40 years, paying the premiums every single year. But obviously, as you're getting older, these premium payments are getting more expensive. So a lot of people just stop paying them. And insurance companies love it because, right, you've paid all this premiums for 30, 40 years, and they don't have to pay a death benefit out to anyone. So very simply put, life settlement is the process of selling your life insurance policy to a broker, to a provider, to a third party. And what we do in our fund is that we buy these these life settlements, as they're called now, and we buy it from anywhere, from 10 to 20 cents on the dollar. So a good example is we'll buy, there's a death benefit paying $1 million. We'll buy it for 100,000. We'll service it for, I don't know, 10,000 a year. And when that individual passes away, we'll collect the full death benefit. So, like I said, very simply, it's paying out $1 million. We buy it for 100,000. The guy's expected to live, let's say, 3 years, or let's say he lives 5 years. He's expected to live three. So if you're spending 10,000 times five, 50,000, you pay it for 100,000. So now you're in it for 150, and it pays out $1 million. So this was the asset class that was brought to our attention. It was as guaranteed as they come, right? Like I alluded to before, death and taxes are the two guarantees in life. And so we did a little bit more research, realized that this was a great asset class to be in, something to preserve wealth, something to build wealth, and something with some safety in it. So long story short, right now, as a matter of fact, so we, took a lot of time. We built the fund, completely legal, did it with a lawyer, spent all kinds of money with with lawyers and accountants, and obviously made it 100% kosher. And right now, as a matter of fact, we're probably about a few weeks to a month in, and we're currently raising capital. And our goal right now in this fund, and we call it a friends and family fund, obviously a proof of concept. We're raising about 10 to 20 million US. We're buying about 100 to 200 of these life settlement policies. And you can join. Obviously, you would have to be an accredited investor to join. But yeah, we're looking to grow this fund, to build this fund out. We believe that that this is a niche of an asset class. Not many competitors in the space. There's a lot of different stock portfolio managers, real estate, bonds, fixed income, etc. But there's not a lot of talk about this life settlement. And as a matter of fact, the biggest players in the space are the biggest private equity groups in the world, the Apollos, KKRs. Berkshire Hathaway is a huge player in this space. So, so we found a little bit of a niche, and that's sort of the fund and sort of the side project that I'm currently working on.
It's incredibly fascinating for me, the distance between me and you, it's like overseas. And eventually when I hear about this opportunity about creating an underlying asset, which would be another economic cycle and being able to raise a fund like upon that underlying asset, and which is not like, like uh, day-to-day assets that we're all focusing on, might be an incredible opportunity for me. And of course, to listen. And I would like to ask you, like, I'm sitting in front of you, and I definitely do not know about where whatever that you just spoke about, and I would like to hear how come that you and your partners reach to the understanding that this is the thing that you're eager to do, and how exactly you'll design your product because um I don't know. For me, it sounds incredibly rare, and I definitely do not know everything. Um, and I'm eager to know how would you structure the proposition? Because by the end of the day, there are a bunch of opportunities, but you really need to spy yourself out of the competition. And the question is how?
It's a great question. And, right now it's obviously it's been a process. It's not something that just this happened overnight. This has actually
Of
been
course, of
almost
course.
like a year and a half. And the thing that I've learned, effect, and
Really?
I could share with your listeners as well, is good things take time. And that there's no, I know a lot of people nowadays look at social media, the Instagrams, the TikToks, they see people selling all types of courses and people driving in like the Miami, all these Lamborghinis, etc., people getting rich in their early 20s. The truth is, if you want to build wealth and if you want to get rich, good things take time. Another thing that I learned is, shortcuts lead to failure. So why I bring this up is because right now it's taken, a little bit of time to properly build out this fund, making sure, obviously, when you're raising capital, and especially from friends and family, you need everything to be 100% right. You're dealing with, a lot of money for some people, and they're obviously putting their trust in you. And especially when you're kind of starting with this proof of concept, fund to initially start it, there's a lot of people and there's a lot of backlash and there's a lot of people saying, well, I'll invest in the next one. You guys don't have a track record. But, for the early adopters who believe in us, it means the world to us. And, we're confident that we could achieve very high returns in this asset class. Like I said, we're predominantly buying a portfolio of these life settlement policies, and we have a strict criteria of buying, and we have a sort of formula that we go through in order to pick these policies. And a lot of the times, right, you get into the more expensive ones, the ones that are the death benefits are 1 million to 5 million plus. You're actually competing against bids with the Warren Buffett's, KKRs of the world. So obviously we don't want to get into a bidding war with Berkshire Hathaway. So we have a little niche where we're focusing on the 100,000 to $1 million in face value policies. So, to answer your question, there's a lot that goes into this. The reason that we kind of got into this again in the first place was, funny enough, like I said, it was a family friend of ours that he linked up with the largest player in the space in South Florida, maybe one of the largest players in the U.S. when it comes to selling these life settlement policies in the secondary markets. He started buying a portfolio for himself. He actually told my father, who's an investor and a partner in this as well. He told him about this asset class. My dad, who just turned 60 years old, is now looking for assets that are more safer, guaranteed. At 60 years old, or at our age, in your 20s, early 30s, you could kind of take gambles and buy the cryptos or these meme coins, or you could take these little gambles here and there. But truthfully, at 60 years old, if you're kind of still hoping to get rich quick on a meme coin, then I know then something has to be obviously wrong. So, when I was introduced to this asset class, I was actually just about to leave my firm in the private equity world. And when I kind of looked through this asset class a little bit deeper, I thought that this was almost too good to be true. How could you lose if you're right? If you have a formula and you're buying these life settlement policies at such a discount to their death benefit, then really all you have to, everyone at the end of the day is going to meet, his or her maker. And the truth is like I said, when it comes to guaranteeing in life, there's not many guarantees, death and taxes, like I said, and death being, the first one. So in this asset class, if you're in a space, where Berkshire Hathaway and these guys are major players in the space, you must be in a good space to play in. So right now with this fund, like I said, we're currently building it out, raising capital. We believe that obviously we could grow this, and we have a little bit of a niche in the policies that we're buying, and also the fact that like you and I'm sure a lot of your listeners, nobody really knows about this space. We call it the best kept secret in alternative investments. So like I said, I've been in real estate, I've been in stocks, I've been in private real estate. I've kind of been through it all, and truthfully, this asset class was the thing that piqued my interest the most. And spoke with a few partners, we brought in a couple more, and we wanted to create a full business and really go all in on this. So that's currently what I'm working on right now with funding, but
Let me
as
let me
well
ask
as
you this. Let me ask you this.
sure.
When you took up your cell phone and you're writing out to your friends, I was wondering if like no, how do you pick partners for such a business? I think I don't know. I don't know. I'm not aware of how to pick the right partners to such a business like for secret investing in underlying assets. But I would like to ask you, how would you identify the right man or woman, of course, to join you on board, that you're 100% aware that they can bring like another color to the cap table.
That's a great question. Typically, what I personally look for is number one, I would ideally look for someone that's a little bit older than me. And the reason why I say that is because they have more experience, and experience when it comes to these types of things, or not even these types of things, just anything in life is right. You want to bring in partners with experience that could bring you mentorship, that you could grow and learn from them. Whereas, if you kind of come in with your friends and you're all at the same level, the odds of success, well, I wouldn't say you obviously can have success because there's many successful stories, but truthfully, is I personally, if you're asking me, Ryan Gold, what I'm looking for is I'm looking for someone who's, like I said, who's older than me, who has more experience that I could learn from. Because right now, like I said, we're both relatively young. I'm 31. I know you're in your early 20s. So ideally, you want to pick partners that, number one, also that they're not too old in the sense that in a year from now or in a couple of years they're going to retire, but you want to pick partners that are hungry, motivated, they align with your interests, and like I said, most importantly, that you could learn from. Because right now, and I could tell you just because I'm a little bit older than you, is that you want to have you want to find a mentor, whether it's one or two of them, someone older, someone wiser, more experienced, and really learn and pick their brains. And truthfully, it just happened to be that in my case, my father is that to me, and the family friend who brought
How
us to
great it
this.
is.
Yeah,
How great it
so
is.
so
It's an incredible privilege to embrace
for sure.
whatever or whenever your father says to you.
For sure. And it just, yeah, so in this case, it was close to home. And so really, that's my advice. Really, you want to be with someone, like I said, whether it's a family member, whether it's a friend. But like I said, if or or if it is someone that's relatively young or our age, but as long as, right, they're providing value, you're constantly learning from, and you're obviously becoming a better person, a more knowledgeable person. So that would be my answer while looking for a partner. And obviously, besides all that, is they have to share the same vision as you. They have to obviously see the end result, or of what this fund or this business or whatever the case may be. They have to share the same same mission, the same what they see in the future. You guys have to be totally aligned. Because if there's early on, if there's rifts, if you don't see alignment, if one guy's saying one thing and you say the other, truthfully, you should probably end that partnership sooner than later, because it's only a matter of time until as they say, shit hits the fan. So I would say, obviously, to have total alignment with your partners, and obviously you want people in there with the same vision. And, it also helps that if you're close to them, obviously that's a huge plus as well.
I've learned a lot from like this those the past 20 minutes speaking about your the business that you're currently running, both from like new industry and like how to discover a new industry and how do you look at things as an entrepreneur, which for me it's pure gold, because I really like when I have an alignment like in mind with another entrepreneur. Like for me, it's much appreciated, and I really appreciate those entrepreneurs that I think like that my way of thinking is like next to their way of thinking, which I think it's real powerful for me to learn and absorb and embrace like whatever that you're saying. It's a real pure goal for me. So let's even dive deeper onto your side hustles that you're doing currently. So yeah,
Yeah.
feel free.
Okay, perfect. Yeah, so that's definitely one side hustle, and that's something, right? So we're currently raising capital. Obviously, if there's any accredited investors, because unfortunately, not anyone could just invest in this fund. We're very regulated, and obviously the space is very regulated. So for any listeners that obviously want to learn about life settlements, I'd be happy to share more. Happy to share about our deck, about the experience, and the asset class as a whole. So that's one side hustle. Now let's focus on the other one, which I hopefully want to talk about this one for the rest of the time that we have together. So I, along with someone else, started another small business where we work predominantly with broker dealers, prop trading groups, technology when it comes to trading, and we help them essentially grow their business. And one of them that I'm currently working with, which is probably the largest equity prop trading groups in the world, and that's called Zimtra. And I know for the listeners out there, I know a lot of people float the word prop trading. We're a fully real prop trading group. We've been around, the partners have been around and whatnot for 20, 25 years, pioneers in the space essentially. And we offer basically funded accounts and advanced trading solutions for all sorts of traders. So basically, we welcome all traders seeking to expand their trading potential with enhanced buying power and obviously institutional grade resources. So,
Brilliant. Brilliant.
yeah,
I'll stop you for a moment. I will stop you for a
sure.
moment, and I would like to say, and I would like to repeat your words. A platform is a flat to the majority of the people. Now you started by we have like 25 years in experience. We're actually pioneers in the space. And I would like to understand from you basically what differentiates Zemtra out of the rest of the competition and why, like me as US equity trader, I think that we'll dive deep into why, like, that niche specifically is the niche that you have chosen in the backstage. Why
For
me
sure.
should why I need to participate with you guys. So
100%. So I could talk literally from experience because, back to my, 2020, 2021 days for those couple of years, I was day trading, right? And I was kind of using, different programs. I mean, here in Canada, we don't really have many options. I know Interactive Brokers is a global platform, so let's say most people know about them. But when you're specifically day trading, you don't know, there's typically a lot of commissions, lots of fees, especially when you're buying and selling very quickly, you're in and out of positions. There's a lot there's a lot of different hidden fees, and you don't necessarily get the best execution, the best routing. For example, you put in a bid for $100.05. It may hit that price, but you actually see that your average price is $100.10. So that little 5 cent spread might go to the broker. And even though for a smaller trader that might be insignificant, however, for a bigger trader doing that many times over and over, those prices, tend to creep up, and you could potentially lose, or I wouldn't maybe say lose money, but you could, limit your gains by doing that. So what stands out with Zimtra, for example, as a prop trading group, and what prop trading is essentially is that you're trading our capital. So essentially what you would be doing as a trader, you affect you're a trader, you're interested to trade. One thing, obviously, going back to
I
the
am.
institution. Ah, there you go. Exactly. So you're a trader, right? You're a trader, and there's two things, right? Many traders want more capital to trade with, right? Because if you only have a couple $1,000s and you want to buy Microsoft that's trading at about $400 a share, and you have $1,200 to play with, you're only right. Essentially, you can only buy 3 shares with that. So and truthfully, you're not really going to make much money with 3 shares. So what really stands out with us is, like I said, is that you're trading our capital. So you're a trader, you want to open up an account with Zimtra. So you would open an account with Zimtra, and there's obviously different options depending on the type of trader, depending on the risk tolerance, and obviously if you're profitable, if you've been doing it many years. But you can choose, let's say, the elite option, where we provide 10-to-1 leverage. So essentially, you could put the minimum, which is $1,000, a fully, it's called a performance bond. It's your money. We don't touch that to trade. But when you give us that 1,000, we provide you with $10,000 of buying power. So now all of a sudden, you could buy definitely a few more shares with that 10,000. But obviously there's different packages, there's different tiers. The good thing about us is we're very flexible. Typically how we make money is we make money on volume. So typically we're looking for traders that are big high volume traders. That's where we make our money, and obviously that's where you make your money. And so yeah, and obviously, so that's one thing. The buying power is a huge thing. And the second thing is, and funny enough actually, and this is a relatable story for you, is that I currently am talking to a trader based in Jerusalem, actually, probably not far from you. And as a matter of fact, so this guy, he's a trader. He's been doing it for 20, 25 years, and he's actually with one of our competitors, but he's not happy. And the reason why is because what I alluded to earlier with the execution and the routing and the fill prices is that he doesn't believe that he's getting the best the best fill prices. So essentially, like I said, those few cents doesn't make a difference when you're only trading a few shares, but if you're trading hundreds, thousands, tens of thousands of shares, those add up very quickly. So he wasn't happy with his current
Obviously.
infrastructure. And right now, as a matter of fact, he just currently opened up an account with us, and he's testing our infrastructure, which he's very happy with. And I mean, it's pretty much official now, but I believe that him and hopefully a few of his other traders that trade along with him will be joining Zimtra. So that's typically something that stands out, and that's something that we pride ourselves with.
Brilliant. So eventually, I would like to ask you another question before we wrap up this conversation, this incredible conversation. And I would like to say that um, being a trader with Zimtra would eventually contribute a lot of sleepless nights, like lose sleepless nights that I would lose without participating with you guys. Now, I would like to ask you, on the other hand of the tier, why would you? I'm saying you as a Zentra representative. Would do such a thing. Like for many people, when they get a leverage, they get the opportunity to put a down payment and they get a leverage for their money. It's not an appreciated, and many people will think that it's too good to be true. And I would like to hear from you what leads you guys to make such a decision, and what makes you guys to leverage your money knowing that you can make way more with by your own.
So it's a great question. And quite frankly, the reason why we've been in business for 20 to 25 years already is simply that, we're very good at risk management. So, the team at Zimtra has placed all sorts of money over the past couple of years in order for not to blow up the firm. And what do I mean by that? We see a lot of our competitors, essentially blow up. And what do I mean by blow up? A typical example is shorting stocks. So one thing actually that we also pride ourselves at Zimtra is that we probably have the best locates on the street. And locates are for shorting. So for the short sellers out there that are interested, that's something that we could pride ourselves in saying that we probably have the best locate rates on the street. With that being said, and the reason why I bring up shorting and risk management is essentially we've seen a lot of our competitors fall and a lot of their traders come to us. Why? Because we're better at risk management. So, shorting stocks, these high flying, penny stocks of these Chinese companies that one day they're at $2, $3, and you wake up the next morning and they're trading at $97, $98. And these
So
little
I understand you're
positions,
looking for diversification. Basically
it,
speaking, you're looking for a comprehensive diversification of people with different minds and different brains to come on board and to say, hey, no, I'm interested in trading this type of instruments or this type of asset classes. Um,
Oh, actually,
and
just to pause you for a second. Actually, we're actually looking. It's pretty specific who we're looking for. It's very simple. Day traders who like to trade U.S. equities, and the real U.S. equities, because I know a lot of these other brokerage companies
I
out
was
there are
waiting for
offering
you to mention it.
an instrument called CFDs. CFDs are very big. Crypto, futures, forex, options. We do none of that. We're solely US equities. And that's why I could comfortably say, probably on a volume basis, that we're the largest US equity prop trading group in the world. And to answer your other question of why would we want to bring traders, is that we want to be the place for US equity traders to comfortably trade, to know that their capital is safe, to know that they have a great support team behind them, which definitely I know a lot of our competitors obviously have these new AI chatbots where you simply write a message and you never really get your question answered. Whereas if you're messaging someone on the support team of Zimtra, you're actually getting a real person, whether it's an email, a WhatsApp, a Zoom call if necessary. So there's real people on the other end of that line. And that's something that we very much pride ourselves with at Zimtra. And
You
the other thing,
should.
going back to risk management, is simply, like I said, we have risk management in place where, for example, that you can't lose, like on any given day, you can't lose more than 10% of your performance bond that you put up. So essentially, right, that if you put up that 1,000, you have 10,000 to play with. But as soon as you're down $100, the account is actually frozen and you have to put more funds in. So essentially, right, we don't want that risk of you losing our money that's essentially coming out from you. And ideally, the type of customers or type of traders that we're looking at, very simply, they have to be profitable, because truthfully, if you're not a profitable trader, you're not going to be a trader for very long. So long-term profitable US equity traders, and typically the ones who do more of the high volume, those are the ones that we like the best. Obviously, the ones, obviously people have to start somewhere. So we do offer simulator accounts where you could paper trade, learn the systems. And quite frankly, hopefully you get to that point of, you put on a couple of real trades, and they don't have to be very big trades, but, hopefully in order to make big money in this game, you obviously have to trade volume. You have to be smart. You have to manage your risk while we manage our risk on the back end. And, hopefully we've had many traders trade with us for many, many years. They do it for a living. And like I said, those are the type of traders we're looking for. And truthfully, anybody other than people in the United States can open up an account with Zimtra. So for all the listeners out there, US equities, if trading is something that you're looking to get bigger into, you could please reach out to me. You could reach out to the team at Zimtra, and we'd be glad to help
I
you
will
get
leave
set
a
up.
link below, of course. And by the way, guys, I just want to mention that me and Ryan right now working on establishing more and more events to promote Zimtra. This is not like a promoted podcast. We just wanted to come across and speak, but right now we're working on establishing more and more events to bring this opportunity alongside with people that are really interested in like getting in relation with the market, especially the U.S. equity markets, as Ryan mentioned. So I would highly, highly, highly recommend you to go onto the link in the bio, zimtra.com. It's ZIMTRA.com. Go search about do a deep dive about what Zimtra can offer, because I can self assure out of my experience Meeting so many individuals, Zimtra would open up an incredible gates for you. So that was my words about Zimtra, and I would like to thank you, Ryan, for your time and participating with our podcast. It was an incredible time listening to you and learning more from you and about your journey. And I'm so glad that we had the opportunity. So thank you.
Thank you so much,
Um,
Effect, for having me, and for anyone
it
listening out
was my
there.
pleasure. It was my pleasure, mate.
Yeah, no, I appreciate it. And for the listeners out there, appreciate you listening. And please feel free to connect with me on LinkedIn. My name is Ryan Gould, Ryangold, and happy to talk anything from stocks to life settlements to entrepreneurship, anything like that. So please feel free to connect, shoot me a DM.
Reach
I'd be
out,
happy to talk with you guys.
reach out, guys. Reach out. I would highly suggest to meet Ryan. He's a great guy. He's a great guy with a great personality. So thank you for being here. It was a
Thank you.
pleasure. Thank you guys for listening.